Okay, the first problem we're going to do for Chapter 5 is 5-2b, which is on page 247 of your textbook. We're working with the Revenue and Cash Receipts Journal. Transactions related to the revenue and cash receipts completed by Sterling Engineering Services during the period of June 2nd to the 30th are as follows. And it's going to list our transactions, and we're going to come back to those. Under our instruction, insert the following balances in the general ledger as of June 1st. So that's where we're going to start. And this is something we haven't done before. We talked about temporary and permanent accounts in a previous chapter, and what we're going to do right now is we're going to put some balances into our permanent accounts. For example, cash, accounts receivable, and equipment all have balances when we started June. So what we're going to do is over on our general ledger, our first account name was cash, and the account number is number 11. We're going to fill in our date, June 1st. Under item, we're going to write the word balance and put a check mark in the post reference column. Our book tells us that our balance is $18,340, so we're just going to stick that in the balance column. So what you've done is you've opened a cash account. Okay, the next one is accounts receivable. The account number is 12. Fill in our date, the word balance, check mark, and our balance is $2,650. Okay, our third one is office equipment. Our account number is 18. June 1st is our date. The word balance, check mark, and our balance is $34,700. Our last one is fees earned with an account number of 41. And it tells us in our book that fees earned does not have a balance, so we're not going to put anything in the lines of our account. Okay, step 2, insert the following balances in the accounts receivable subsidiary ledger. Okay, so if we turn the page in our step-by-step, we are now at the accounts receivable subsidiary ledger. Our first account name is called Auto Flex Company. You'll notice these do not have account numbers. Our date is June 1st. Balance. Because it is an accounts receivable, it's going to have a debit balance, $1,670, and you'll notice that it only has one balance column in the subsidiary ledger because it has to be a debit because it's an accounts receivable. Now, if someone overpays their bill, then we would show that they have a credit balance, or they have a credit with us by putting that number in parentheses. Okay, the next one is Cooper Development Company. That is a balance of $980. The third one is Ridge Communities. This one does not have a balance, so we're just going to write the name at the top. And the same with the last one, which is Ye Company. Again, no balance, so we just write the name at the top. Okay. Back to our instructions. Step 3 says prepare a single column revenue journal and a cash receipts journal. Use the following column headings for the cash receipts journal. Now this part has already been done for us. Okay. One thing this does tell us is that the fees earned column is used to record cash fees. Insert a check mark in the post reference column when recording cash fees. And I'll explain that when we get to it. So we're going to skip down to step 4. Step 4 says using the 2 special journals and the 2 column general journal, journalize the transactions for June. Post the accounts receivable subsidiary ledger and insert the balances at the points indicated in the narrative transactions. Determine the balance in the customer's account before recording a cash receipt. Okay, so what we're going to do is we're going to come back up to the top of our page and we're going to start journalizing these. So you can go ahead and set your accounts receivable subsidiary ledger to the side. And we're going to look at the page that has our revenue journal, our cash receipts journal, and our general journal. Okay, our very first transaction says, June 2nd, issued invoice number 717 to Ye Company for $14.30. Excuse me. Issued invoice, which means we've sent them a bill for something. So this is going to go into our revenue journal. So we're going to come over here to our revenue journal and fill in our date, June 2nd, 2014. The invoice number was 717, and it was written out to Ye Company. So that's going to be our account debited, is Ye Company. Our amount was $1,430. And that's going to be an accounts receivable debit and a fees earned credit. We performed services on account. Our next one, we received cash from AutoFlex for the balance owed on its account. Received cash from AutoFlex for the balance owed on its account. Well, since we're receiving cash, we're going to go to our cash receipts journal, fill in our date, June 3rd. We know our account is AutoFlex. However, our textbook doesn't tell us our amount. Okay. We have to go back to our subsidiary ledger, find our AutoFlex company account, and the amount was $1,670. $1,670. Now, we have 3 columns. Only one of them is a debit and 2 of them are credits. Obviously, we're going to debit cash because we received cash. We are receiving cash for a balance they've owed us. We are not receiving cash for services we performed. So this is going to be an accounts receivable credit. They no longer owe us that amount of money, so we have to take it out of their account. So we're going to credit accounts receivable, debit cash. The next one, on the 7th, issued invoice 718 to Cooper Development Company, $670. Issued invoice, so we're going to our revenue account. Revenue journal. Excuse me. It is the 7th. This was number 718 to Cooper Development Company. For $670. In essence, these journals kind of make it a little bit easier because you really don't have to think. If they've issued an invoice, it goes in the revenue journal because there's an invoice number column. And there's only one column to put the number in. Number 10, issued invoice 719 to Ridge Communities, $28.40. Okay, so it's the 10th. 719, Ridge Communities. and the amount was $2,840. Now, the next step in our journal entries tells us to post the revenue and collections to the accounts receivable subsidiary ledger. So go ahead and grab your accounts receivable subsidiary ledgers. Looking at the top of our revenue journal, we're going to start with Ye Company on June 2nd, 1430. So we're going to come down to our subsidiary ledger all the way to the bottom to Ye Company, fill in our date, which was the 2nd. Post reference is going to get a little bit different here. We're going to put the letter R for revenue, and then the page number is 40. We're going to debit Ye Company for $1,430. And the reason why I'm debiting it, how I know I'm going to debit it, is because this is an accounts receivable subsidiary ledger. And if I look at my revenue journal, it tells me to debit accounts receivable. So that is why I'm debiting Ye Company. I'm going to take that $1,430 over to my balance column. Now, there are no account numbers here, so when you go back to your revenue journal, instead of putting an account number in the post-reference column, we're just going to put a check mark there to show that we've done that one. The next one is Cooper Development on the 7th for $670. So we come down here to Cooper Development on the 7th, R40, a debit for $670. Now we already had a balance of $980, so we have to add these two together. And we get a new balance of $1,650. No account number, so we go back to our journal and put in a check mark. The next one on the 10th is Ridge Communities for $28.40. So we come down here to Ridge Communities and fill in our date, June 10th. Our post reference is R40. It was a debit of $2,840. We did not have a previous balance, so our new balance is $2,840. Again, no account numbers. So we're going to come back up to our journal and put a check mark there that we've done it. Coming down to our cash receipts journal. On June 3rd, we had a journal entry to AutoFlex Company. And just looking at our accounts receivable column, it was a credit of $1,670. So we come down here to our ledger, fill in our date of the 3rd, CR36, and I know that's a lot to squeeze into that little box, CR36. And it was a credit of $1,670, which is what our balance was. Now, when you have an account that has a zero balance, we're going to put a line here. We're not going to write the number 0 because someone could add numbers to the beginning or end of it. We're just going to put a line through it. Again, no account number. So go back to your cash receipts journal and put a check mark in the post reference box. Okay, set your ledger to the side. We're going to go back to our instructions. On the 14th, received cash from Cooper Development for their balance owed on June 1st. Received cash from Cooper Development for the balance owed June 1st. Now remember, it says on June 1st, so we're going to keep that in mind. Received cash, so we're going to our cash receipts journal. It is the 14th, Cooper Development Company. Looking at our ledger, looking at our general ledger, our accounts receivable ledger, Cooper Development currently has a balance of $1,650. However, our instructions say what was our balance as of June 1st. And if we look here, our June 1st balance was 980. So that 980 is the number we're going to use. So we're going to do a cash debit for 980 because we're receiving cash. We received cash for a balance owed. So that's also going to be an accounts receivable credit. Okay, a balance owed, not for services performed. In your textbook, number 16, on the 16th, we issued an invoice number 720 to Cooper Development Company. Issued invoice number 720 to Cooper Development Company. So up at the top in our revenue journal, it is the 16th, 720, Cooper Development Company. And it was for $400. Okay, the next step in our direction says post the revenue and collections to the accounts receivable ledger. So we're going to go ahead and grab that ledger again. We're going to start with our revenue account. We had one entry to our revenue journal, and it was to Cooper Development Company for $400. So we'll come down here and find Cooper Development. It was the 16th, R40, $400 debit. So we're going to add these together because they're both debits. And we get $2,050. Come back up to your journal and put a check mark there. Moving to our cash receipts journal. On the 14th, we had a journal entry to Cooper Development, and it was an accounts receivable credit for $980. So going into our accounts receivable ledger, it was the 14th, CR36, and it was a credit of $980. So we need to subtract that one from our balance. And we get $1,070. No account numbers, so we go back to your cash receipts journal and put a check mark in the post reference column to show that we've done that one. Okay, setting your ledger aside again, not too far. On the 18th, we received cash from Ye Company for the balance due on invoice as of June 1st. 18th, received cash, so we're going to our cash receipts journal. It is the 18th. It was Ye Company. Received cash for the balance owed, for the balance due on the invoice of June 1st. Well, two different places you can get this information. First, we can just scoot up to our revenue journal and find June 1st Ye Company, and the amount was $1,430. Or you can check your accounts receivable ledger. So $1,430 is our cash debit. Again, we're receiving cash on a balance that was owed, so it's going to be your accounts receivable credit. The 20th, received cash from Cooper Development Company for the invoice of June 7th. So we have the 20th, Cooper Development Company. Looking at the invoice as of June 7th, so we're going to jump up here to our revenue journal. June 7th's invoice was $670. So coming back to our cash receipts journal, we had a $670 cash debit and a $670 accounts receivable credit. Issued invoice number 721 to Autoflex for $860. So come up here to the 23rd. Invoice number 721 to the Autoflex company for $860. Okay. On the 30th, we recorded cash fees earned. Now this is the one they were talking about in step 3 that I said we'd look at in a little bit. Cash fees earned. Okay. We're receiving cash for services that we have performed. So it's still going to go in the cash receipts journal, which is where we're going to head now. Our date is the 30th. There is no account to credit, so we're going to put a check mark here and a check mark here because there's nothing to post. We're going to credit fees earned for the $4,520. And we're going to debit cash for $4,520. Okay. Our last journal entry. Received office equipment of $1,800 in partial settlement of the balance due on the Ridge Communities account. Received office equipment of $1,800 in partial settlement of the balance due on the Ridge Communities account. Now, we are not receiving cash. We are not issuing an invoice. So this one's going to go down in our general journal. So our date is June 30th. Office equipment is going to be our debit because it is an asset and we are receiving it. $1,800. Now we need to credit 2 different things. We need to credit accounts receivable. Try that again. And we also need to credit the company name, which is Ridge Communities. And the way that we're going to remember to post both is we're going to put a line right through our post reference column to show that we need to post this twice. And again, this is going to be our credit, $1,800. Okay, the next step in our book tells us to post revenue and collections to the accounts receivable subsidiary ledger. So we're going to go back and pull that subsidiary ledger back over here. Start with your revenue journal. We're always going to start with our revenue journal. In our revenue journal, on the 23rd, we had a journal entry to Autoflex for $860. So we're going to come down here to our accounts receivable ledger, Autoflex, 23rd, R40, a debit of $860. It had a zero balance. So it now has a balance of $860. No account numbers, so in our revenue journal, we'll just put a check mark there. Okay, jumping down to our cash receipts journal. We have 2 things that need to be posted. On the 18th, Ye Company had a credit of $1430. So we come down and find Ye Company. 18th, CR36 had a credit of $1,430, which gives them a new balance of 0. Because remember, this is a debit. So debit minus your credit gives you 0. And then we put a check mark back in our journal to show that we've done that one. On the 20th, Cooper Development had a credit of $670. So come back down and find Cooper Development. 20th, CR36, a credit of $670. and then subtract them, and you get a new balance of $400. Again, no account numbers, so we put a check mark that shows we've done it. Okay, looking at our general journal, we are only posting things to our accounts receivable ledger at the current moment. The only account that's listed here that's in our accounts receivable ledger is Ridge Communities. So we're going to use Ridge Communities on the 30th was a credit of $1,800. Let's come down to Ridge Communities, 30th. For this one, we're just going to put the page number, which is number 1. And we had a credit of $1,800. Since this is a debit balance and this is a credit, we're going to subtract them, and we get $1,040. Okay, back in your journal, we're going to put a check mark in the bottom to show that we posted that to Ridge Communities. So looking at our journals, everything in our journals has been posted individually. We have posted to all of these accounts, to all of these accounts, and we posted to our one accounts receivable subsidiary ledger account. So we're going to go back to our book, to the instructions, and step 5 says total each of the columns of the special journals and post the individual entries and totals to the general ledger. Insert account balances after the last posting. Okay. So let's start with our revenue journal. You can go ahead and set your ledger to the side. We're going to start with our revenue journal. Our date is going to be the 30th. We're going to write totals. We're going to put a single line and add them up. Once we've added them up, we find out that our total is $6,200. Most times the reason why you add your journal columns is to make sure your debits equal your credits. In this case, our journal only has one column. So we know they're equal because there's only one column. So you can go ahead and double underline that. Moving down to our cash receipts journal, 30 totals. Drawing a single line across. Whoops. And adding up the columns. The first one's pretty easy. Okay, the second column's total is $4,750. And the third one is $9,270. Now this one, if we were to add these two numbers together, we would get $9,270, which is equal to our debit, which is exactly what we wanted. Since we know that they're all equal, we can go ahead and double underline them. Okay. Your general journal at the bottom, you really don't need to total this one. There was only one entry, and you can tell that your debits and your credits are equal. The next thing we're going to do is we're going to post our totals. So we're just going to focus on this last column in our revenue journal. We're going to post to our general ledger, which is the first ledger we started with, the one with cash and accounts receivable. In this case, we are going to post a debit to accounts receivable and a credit to fees earned for the total amount. We're not going to do each one of these amounts individually. We're only going to look at the total. In this case, that's $6,200. So we're going to come down here into our general ledger in our accounts receivable. It is the 30th. It is a revenue journal, page 40, so R40. It's a debit of $6,200. Since it's a debit, we're going to add these two numbers together to get our balance. And we get $8,850. And now we're going to take our account number 12 back up to our revenue journal. And underneath here, we're going to put the number 12 in parentheses. We're also going to post this $6,200 as a fees earned credit. So coming back to our general ledger and finding fees earned, our date is June 30th, R40. is our post reference. Our credit is $6,200. We did not have a balance before, so our credit balance is also $6,200. Take our account number 41 back to our revenue journal in parentheses at the bottom to show that we've posted that total to both accounts. Now the next one is cash receipts. This one has 3 columns to post. We're going to start with the fees earned credit of $45.20. So we go to our general ledger at the bottom. It is the 30th, CR 36 for cash receipts 36. And we had a credit of, sorry about that, $45.20. Since we already had a credit balance, we're going to add those two numbers together. And we get $10,720. Take your account number 41 and put it at the bottom of the fees earned column in parentheses to show that you've done that one. The next column is an accounts receivable credit for $47.50. An accounts receivable credit for $47.50. So we're going to go into our general journal, 30th, CR 36. It was a credit of $4,750. Since it was a credit, we're going to subtract these two numbers, and we get $4,100. And we're going to take the number 12 of our account number back to our journal in parentheses under the accounts receivable column. Our last one for this journal, cash debit of $9,270. A cash debit, $9,270. So looking at our general ledger, it is the 30th, cash receipts 36, a cash debit of $270. Since we already had a debit balance, we're going to add those two numbers together. And we get a new balance of $27,610. Our account number of 11 will go back to our journal underneath the cash debit column. Almost finished with the posting. Come down here to your general journal. The first one is office equipment, debit $1,800. Okay, office equipment on the 30th, page 1, a debit of $1,800. We already had a balance, so we're going to add these two together. And we get a new balance of $36,500. Our account number is 18. So we're going to take this into our post-reference column. On the next line, we've posted half of it to Ridge Communities. The other half goes to accounts receivable. So it's an accounts receivable credit for $1,800. So accounts receivable on the 30th, page 1, credit of $1,800. And then subtract these two. And you get a new balance of $2,300. And we have an account number of 12. Take that back to your journal and put that on top of that line. Okay, if we check our post references, check all of our totals, make sure they've all been posted. Our post reference columns are all filled in, so our posting should be complete. Back in our textbook, step 6 tells us to determine that the sum of the customer accounts agrees with the accounts receivable controlling account in the general ledger. What we're going to do is we're going to grab our accounts receivable subsidiary ledger. And we're going to add up our accounts here. I'm going to use my little math edge. The first one is 860. The next one is 400. Then we have 1,040. And then we have 0. So we're going to take these three numbers and add them up. And I get 2,300. This number should equal our accounts receivable account. If we look at our general ledger, our accounts receivable account has a balance of 2,300. So we are equal. So we have completed the problem correctly. Now, if those two numbers didn't equal, then you'd have to go back and find your mistake. Okay, this covered the revenue journal and the cash receipts journal. The next section is going to cover, oops, find the right pages here. The next section is going to cover the purchases journal, the cash payments journal. So go ahead and go to the next video, which should be Chapter 5, Video 2.